prices were so ridiculously cheap that I was able to get in as a first-time buyer and actually invest my money. It's also when I started buying a lot of stocks, I set up my Roth IRA, I started buying index funds. A lot of this I started in like 2009 to 11, and then from that point I began to build up. So listen, that was a bit of lucky timing on that one, that I wasn't like a few years older, because I would have had a totally different outlook on this. But crashes like this, as long as you could weather your way through them, are some of the best opportunities of a lifetime.
But here's the thing, that's not what's coming. And if you're waiting for another 2008 crash, you're going to get wiped out. I called it the reverse market crash because instead of deflation, we're facing an inflationary crash. Bitcoin's up 186%. Gold, which so many wrote off as dead money, has surged almost 95%. Even the NASDAQ and the S&P have moved higher, up 52% and 46%.
Yeah, that's why asset prices are skyrocketing. But people keep saying, okay, we have a reverse market crash. Inflation is basically seen now throughout asset prices. The Federal Reserve is injecting a lot of money. People are taking that money. They don't want to hold cash anymore. So what are they doing? They're buying precious metals, alternative assets, houses, and the stock market, causing those prices to crash upwards, so to speak. And it's always going to be true until the one day it's not. And now I'm not saying there's going to be a crash and that everything's going to be falling 50%, but I am just saying to be cautious that the market doesn't always just move up indefinitely.